Hi all, welcome to the first episode of Direct Stock Investing series. Before we begin, I have a question to ask. How many of you have already invested in direct stocks? If yes, which is the first stock that you have bought? Please share it in the comment section. I am happy to see that. As we move into the first episode of this series, today's topic is, let's begin with what is a stock or what is a share of a company. Let's understand that with a story. Suppose you are planning to start a company. Say for example, you are planning to start a hotel company or hotel. You name it as ABC. So I'm just taking a random name. So that hotel name is ABC. You are planning to start a hotel. And you are putting aside say 1 lakh rupees for that. All these numbers or all this money that I am saying is just for the sake of example. Don't take it in the literal sense. Now you know that there are a lot of things that needs to be taken care of when you start a hotel. You need to get a building. I'm not talking about a big hotel, a small setup. 2 or 3 employees maybe, or maybe let's say 5 employees, and you are thinking that you can't do it alone. So you have money, you have some sort of expertise, but you feel like you need a partner to start a hotel business. There are many people, so this is very important. There are many people who do independent businesses. So those businesses are named, or those businesses are termed under the name proprietorship. So there are no external investors or there are no partners. They do it by themselves. But there are some businesses where you need some people to help you, or you need some partners. You can't do it alone. So during such scenarios, what you will do is they are also ready to invest into your business as well, right? Now what happens? You already invested 1 lakh rupees. That another person, the partner, will also come and invest 1 lakh rupees. Now what happens? You are no longer the only owner of the business. You are no longer the only owner of the hotel. There is a equal partner, right? So whatever profit that you make, you both will divide equally, which is 50%. Now you want to later on you start the hotel business with 2 of you, you 2 partners. The business is going on, but you are thinking that you need to expand it further, right? So for that you need additional money. You can go to a bank and take a loan, but you have to pay interest for that. But otherwise, there is one more way you can do, is getting external investors into your business, right? Maybe your family member or your friend or anyone it could be. So if there are multiple investors coming into your business, then you need to make it a structure. So then what happens is, so you put 1 lakh, your partner also put 1 lakh, 2 lakh rupees is there, right? Now you divide that money into shares. Say for example, you put 1 lakh rupees. Let's keep one share face value as 10. So you divide the entire 1 lakh into 10. So one share will be valued at 10,000 rupees. So there are 10 shares in your hand, each of 10,000 rupees. Similarly, the same for your partner also. I will talk about face value maybe in the upcoming videos. This is just for understanding purpose. So you put 1 lakh rupees, your partner also put 1 lakh rupees. Now you are dividing the entire investment into 20 parts, total 2 lakh investment, right? Each share priced at 10,000 rupees. Now let us suppose one additional investor comes and he is ready to invest another 1 lakh rupees. So before that, you both have equal weightage, right? You have 50% of share with you and your partner also has 50% share with you. Now one more person comes and say he is also ready to invest another 1 lakh rupees. So what you have to create another 10 shares. So earlier the number of shares was 20 and the investment was 2 lakh. Now since one more person is coming, you have to create another 10 share and the total investment amount will be 3 lakh. But here is the catch. Before the external investment, the shareholding was 50%, 50% between you and your partner. After the external partner come into the picture, your shareholding comes down, right? Because he is also an equal partner now. Now you have to divide the overall business equally. So what happens? Instead of 50%, your portion or your share will come down to 33.33%. Why? Because there is an external investor also invested into your business. So there are so many terms while I talk come into picture, so you can note it down. Mostly you might have heard about all those terms, but in case you are not aware of that, please note it down, right? So one term that we are talking about right now, so the reduction of percentage of your share in the company came down from 50% to 33%. This is what we call as dilution, right? You might have heard about it in the startup world. We will talk about that in a minute. So now there are 3 people working or building this company. So when more and more investors come, it's always easy when we have shares, right? Otherwise it's very, how do you say for example another investor is coming, how can you say that this much percentage of the company belongs to you? And it's very hard to manage that external investment. For that purpose, to make it easier, this concept of share came into picture. I hope this is clear till now. What is a share and how does that work, right? Now that your hotel business has 3 people, 3 partners building the business, but still this business is a private business. Only 3 people are the owners. Whoever is working under you are your employees. So your business, your hotel business or your company can be called as a private limited company. So even for a private limited company, you have to register in the to the government and get approval from them. Only then you can get that license of a private limited company. Once you register, you will become a director of the company because you are the promoter. See, I am using so many words, right? So promoter means nothing but you are the owner of the business. So there will be, initially there are 2 promoters, 2 owners who will be the directors. Now that one more person came, you can give him also the director position. So there will be 3 directors in the business. So that's how a private limited company comes into existence. I hope till now it's very clear, right? We are just talking about a share. So share is nothing but a portion of a company, right? So it depends on, so in future if more and more investors are coming, what happens is that since your business is growing, that could be the primary reason in which more investors are coming. Either you can create new shares or you can dilute your shares. I mean, you can sell your shares to get some money. That is what we call as exit, which is nothing but you are selling. So 33.33% of shares that you have, say for example, you are selling 1% of share to another external investor who is ready to invest into your company. That means you are getting some money because of holding that particular share for your business. I am not making it too complicated, so let's stop there, that discussion, right? So right now your company is a private limited company. Stock market is a public platform where public listed companies trade. We'll talk about it maybe in the next video. We'll go step by step. So now we are standing at private limited company. Now, again, you have plans to expand your hotel business into maybe other cities or other states. You need more money. Say for example, in lakhs or in crores, right? So initially you will approach your family and your friends and they are ready to invest into your company, let us suppose. Those investments are called as seed investment. You might have heard about it, right? Seed investments is nothing but they are investing at the beginning stage of your company. You are just starting, or let's say maybe within 2 to 3 months. The seed investment are mostly applicable to internet companies or companies that are not taking profits, or they are just in the MVP stage, minimum viable product stage. They only have a product. It's not necessarily applicable to a hotel business, but still it's always good to learn about seed investment, right? So yeah, that small capital when they invest, that is called as seed capital or seed investment. Now again, you have more plans. Now you got some money, seed investment, you expanded your business into multiple cities and other states. You have more plans to maybe start online delivery, or you want to start a website, right? For that you need good maybe technologists, developers, program managers, product managers. So you need more money to pay them. That's when the next stage of investment, right? That is venture capital investment, VC funds. So VC funds have different stages, right? Stage A, stage B investment, stage C investments, like that. So I'm not going deeper into that. I'm just explaining for understanding purpose what is a VC investment. They invest when they can see some sort of traction, some sort of movement in your business. Your revenue is growing. There is good management. There is good leadership. So they will invest more money into your company. It could be initially it could be around $1 million, $2 million, or maybe 5 million also. So that is stage A. It can go beyond as we move into B, C, or D. Now you have established a very medium-sized company, very good business, and you are going strong, right? You are making good revenue. Maybe you are break even, or you are started making profits. Now your plan is to IPO, right? So IPO, I'll talk again another term in the next video. But before IPO, what happens is that now everybody knows about your company, right? Your company is in a very good position. So that what happens is there is one more one more kind of investors who come into picture, who is ready to give you an exit, or in other words, who is ready to buy the entire company from your end. These all are private players, okay? I'm still not talking about public markets. I will come to that later. This entire thing happens in the private market. So the investors who are ready to buy you entirely are called the private equity funds or PE funds. They are very big players, large players with huge money in their hand. They are mostly they will come into purchase your company at the later stage or just before the IPO, right? They will only focus on companies that are established, decently established private players. So why this exit is important? So once IPO happens, you don't know how many people will subscribe, and again you want to continue to do the business or you want to continue to run the business. Instead of that, if this private equity fund is ready to buy you as a shareholder, as a promoter, you will be getting a lot of money into your hand, right? You can exit. Of course, you don't have any control after this, but you are getting a good amount of money. You can do other kinds of business if you want, or you can continue in the same your company itself. There is nothing wrong in that. So most of the times what happens is people sell their company into PE firms. They will buy it. There will be a cost. There will be negotiation happens from the buyer and seller, and eventually the company will be sold to PE. You will be paid for that. The promoters, whoever are the external shareholders, the VCs, right? The previously whoever invested, the venture capitals, the seed funds, seed investors, everybody will be rewarded. Because as we move every stage, the valuation of the company keeps going up. We started with 1 lakh rupees, right? So it becomes 2 lakh, 10 lakh. The value of the company will become in crores. So eventually everybody will be paid handsomely. Now, you are not selling this company to PE. You want to IPO or initial public offering. You want public money, right? You are saying that I am not ready to exit. I want to continue building this business. This is my company, but I need external investment so that I can build it further. So for that, I want to be a publicly listed company in the stock market. That's when IPO happens, right? I will talk about IPO in the next video, but before that, I hope you understood what is a stock, right? And how that formation of a company at different stages, from the basic beginning to seed investment to venture capital investment, into private equity exit, all sort of things. Those all are background things. You don't have to think too much on that front. Come back to the place where the 3 people are owning the company, the hotel business. They continue to hold the hotel business. So the next point that I want to talk is what is called as stock market, right? Now that you understood what is a stock market is nothing but a place where you can buy and sell stocks. It's just a marketplace. We go to shops or grocery shop where you can buy things, right? Just like that, stock market is nothing but a place. It's a marketplace where all the buying and selling of stocks happen. It's a basic definition. How does that happen? It won't happen directly. You need other people in between. I think this video may go long. If I talk about that, I think this would be enough for today's video. So yeah, I hope whatever I talked till now is very clear. What is a stock and what is a stock market, how a company is formed, different stages. And in the next video, we'll talk about IPO and what are the market intermediaries like a broker, right? We'll talk about that, and what are the regulatory filings required for a public listed company, everything about that. And what I suggest is, if I am missing something, please share it in the comment section so that I can add those sections in the upcoming videos. And also, if you are not clear with anything, any point that I am making, feel free to share it in the comment section. Let's learn together, right? And yeah, if you're someone who is interested in direct stock investing, and if you know someone who is passionate about stock market and investing, feel free to share, because this is a start, right? We are just starting to learn about direct stock investing. Let's learn together, and let's build a good portfolio at the end of maybe 6 months or 1 year through direct stocks, right? So, and also don't forget to subscribe my channel. It will encourage me to work harder and to come up with better videos. So yeah, that's all about today's video. We'll talk about the next set of topics in the episode 2. Till then, stay tuned.